Good morning, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for February 15th, 2023. Remember, trading futures involves risk and is not suitable for all investors, and everything we talk about here today is just my own opinion and not a direct trade recommendation. With that being said, let's take a look at what some of the markets might be doing. We're going to be focusing on corn, wheat, and beans here today in this strategy of the day. It's a quick one. Join me every Thursday, that's tomorrow, at 1:30 p.m. Central for the Strategy of the Week webinar. Sign up links in the comment section and information section of this video. Be sure to sign up, join me for that webinar, get a emailed link to the video after it airs live. But we'll be covering all these markets and much more from what you see on the screen over that hour-long webinar every Thursday at 1:30 p.m. Central. Okay, so corn, wheat, beans all down today. We have, what else is there to say? I guess let's start with the dollar index because I do have that chart up here in front of me. Dollar index breaking out now above its downward sloping trend line resistance, above that 55-day moving average. Okay, and we've back above the 18-day. We're now testing the 55-day. Now, in my opinion, we're back towards the 100 to 200-day. Testing probably back towards that resistance area, which wouldn't it comes around that 104 previous support, old resistance, and confluence of SMAs. I think this is the confirmation of a move up to that area. We are overbought in the near term dollar index, daily chart, what have you, on the RSI, but that doesn't mean, it can't continue higher in the near term. Looking at a continuation chart, you see pretty much the same type of idea because every one of the dollar futures contracts, pushed up to that 114 handle and it backed off to basically a test of 100. This is actually a big supportive area, psychological area. You go out on a big enough time frame, you can see the old resistance clustered between 100 and 103 here for the past decade or so, breaking above that level and testing back into support, and what is ultimately a big 50% retracement, right? Dragged from 90 up to 114, 101 area is about 50% of that entire decline. So we're in a bit of a short covering rally. We've broken through resistance, and the next area of resistance is above at 106. 104 to 106, 105 to 106, but really that 106 area on the daily chart. You can see it here, the non-continuous chart, and also would be about a 50% decline from the highs to the lows at this point. So, yeah, not that I'm bullish the dollar the long term, given what we've seen here in the key kind of the reversal off this high that we have. I'm looking at this as a bit of a dead cat bounce in a bear market rally. So I need to see what happens up here at this 106 area, but it does seem like the bulls have a move in the dollar up to that area in the near term. That kind of has put some weight and some pressure on our row crops. I think in the near term, this dollar move has certainly been bearish for commodities. Look at gold, natural gas, crude oil. You could say has traded both sides of the book, but we haven't broken out above 80 and 82, right? We're trading at 77.60 last in crude, so even that is under pressure here with this strength in the dollar that we're seeing. Bond market's also under pressure. The 30-year note happened to have fallen back below the 130 area, probably going towards the 125 area in this larger range. You can see that tiny screen there on the right. I don't want to bring it up because we're going to be shifting focus here to the corn to start, which is where we'll begin our discussion. But the whole point is, bonds are lower, dollar stronger. Commodity markets and certainly our export markets are expected to be a little weaker because of it. Dollar chart or daily chart for corn. I mean, we're still very much in that 680, 660, okay, $7 to 660 range. We're trying to fight to break above this trend line resistance. We're above all of our moving averages, pulling back to test them now as support. But there's room on the chart all the way down to 666 to 650. To catch support before this market, to turn in my opinion, to say that this market is rolling over. Upward sloping trend line against the lows. Wouldn't want to see this market get below 666, 670 area at this time. But we're talking about, splitting hairs here in a corn market that hasn't been above 690 and hasn't been below 670 really in the better part of a month. So I wouldn't be surprised to see us trade both sides of those levels just to push out the weaker handed longs and shorts before picking direction. I'm still favoring the upside here because we seem to be putting more pressure on resistance than support. But so long as that resistance continues to hold, it is there and keeping us from going higher. Right in the middle of our range here for overbought and oversold conditions in March corn. So we got room to the downside in terms of momentum to 666, as well as room to the upside towards 690. This market can still kind of chop around and figure itself out. December corn taking far less of a beating, only down 2 3/4 cents on the day. To me, feels like our spread markets are starting to show and reign supreme. And we'll look at the bear spreading going on in the beans as well. But those overbought, I think, calendar spreads, and we'll look at them again more so in the beans, but same reigns true for corn. Any kind of inversion in these calendar spreads is starting to be unwound in this recent, the recent last month of price action. And the market has really not seen much of a rally out of those front month futures. Yes, we tested highs, we made new highs a month, but here we are well off of them. Okay, so 18-day moving average here in December corn, supportive at 593, failing to break above $6, still keeps a bit of a bearish undertone. Downward sloping trend lines against the highs here for December corn, still holding. Not great, not a great development in the near term, but failing on the 55-day as well. But I think there's some major support here at 580, that we're trying to turn, and pushing through this area opens the door at $6. And I think the move back above $6 for December corn will be a more clear-cut signal when the bull market is ready to be established. Because unfortunately, even with March corn falling back into this range, it may not be a great thing to watch. Back to March corn here for the 4-hour chart. Higher highs and higher lows here were made for the month of January compared to December. Month of February, though, has held December highs up here, with the push up into a new high for the month of February here yesterday. But we've walked back off that high and still find ourselves in this 688, to 668 range, and now closing in, on the bottom end of that. You can see how the upward sloping trend line here could catch us down around that 670 area. So I'm kind of fully expecting us to just retest the lows of the month. It's only 5 cents away. It does nothing to me in terms of retesting the lows of the month by changing the fact that we're, still consolidating in the upper 50% of the range that we were in, right, going back, right? The middle of that range is around 670. So long as we're above 670, so long as you're above 640, you're above the two middle, 6 months back, middle of the range, as well as 4 months back, middle of the range. We're still above those levels, and I think we'll get above 690. But we're open to testing those as support, is my point. And even a flush of this downward upward sloping trend line and a move back down to 640 to 620 doesn't necessarily break the potential for a move to $7 and above. It's just, makes it really hard at a time of the year where we know that if plantings go well, if acreage is big, this next year we see a good production year, could be a wall of grain coming down the pipeline into November and into next harvest. So, yeah, I think there's been some hesitancy without that bullish narrative to continue, and certainly seeing a dropping dollar right now, potentially being headwinds for the export markets, takes a lot of wind out of the sails for the bulls in the near term, and maybe doesn't give us enough to break through the highs, right? And so now we are just in a period of price discovery lower and trying to find where that support might be. Daily chart for March beans, also very choppy here. Kind of this upward sloping wedge down, upward sloping trend lines are lining, at this point in time with the 55-day moving average, which come in down around 150 at this point, or 1500, excuse me, down around that $15 mark. So, okay, that's 23 cents lower. We're still holding the 18-day moving average, which was today's support at 1522. In all intents and purposes, this is still, higher highs and higher lows. Every ebb and flow of this market makes a higher high and a higher low. Even from this pivot at 1480, higher high, higher low, higher high, higher low, right? We're still stair-stepping higher until that trend breaks, until we break above this upward sloping trend line, until we're below 1500. I still see this as an uptrend, but it's definitely not one that I have a lot of conviction is just going to roar higher. I'm not going to lie, this almost looks like we're going to have a big A. This is a B wave correction, and we're due for a very big C leg down to $13. I would not be surprised to see the continuous contract of beans do that over the next month or so. We form a low around $13 into harvest or through, not harvest, into plantings or through plantings. And then, if we catch a weather market, we've got room all the way back up to 16 and beyond. we really catch one. But I don't know. I can't bet on that until we break back below some of these bullish trend in levels. For $15 being one, 15.20 here in the near term being in the max, the nearest one, $15 being the next. I still got to think that we're marching higher. And below those levels, I think we opened to 1440, 1450. That's where the 200-day and 100-day moving averages are. It'd also be 50% of kind of the some of these larger swings. And it would flush out a lot of the, if there's ever an overbought condition here, it would flush that out. Daily RSI has neither been all overbought nor oversold for the entire month of February. So that really, to me, says, between 1,500 and 1,550, we have a bit of a range going on. Give me 1 second here, folks. I'll be right back with you in a second.
One moment, Blair.
They do have a call coming in from a client, so I got to take this real quick. But if you hang tight, I should be back with you in about a minute, 30 seconds. All right, sorry about that. Took a minute longer than I wanted. But anyway, May beans here, March beans, 1524 last. So starting to come up off that low of the day. Something I noticed here, with the March beans that I wanted to point out was this 18-day moving average. We're still well above all of our other moving averages, which have all, we got that golden cross of the 55-day or 100-day above the 200-day there last week. Then we saw a pullback. So yeah, we've got support below that we could trade down into. Going over to the 4-hour chart, however, for March beans, we've broken this next in the series, maybe long, where we're hoping to see support at 1530. Really hasn't done anything to invalidate the last swing from 1480 up to highs. And actually, if you draw from 1480 up to this new high here today, 1650 is the 50% low, and don't you know it, that was the lows of the day so far. So, okay, maybe we push from here up towards the 1560, 1580 upside target, up to the upper ends of the channel that we're trading in, and continue this trend channel higher. So there's a good case to be made that, heck, while we're above 1510, we're just retesting old support. Found a new round of buyers that if it could take us, higher from here. So I'm watching that here today and seeing how we close. That'll be pretty big for me. The old crop, new crop spread here trading at 133.5. You can see down 2 3/4 cents on the day. We're bear spreading still, and this old crop, new crop spread coming off of the 160 over highs, trading down to $1.30 over, came back to 150. We're below the 18-day moving average and kind of rolling over. Downside support 116 at the 55-day, but really I think it moved down towards 100 or $1 over, and a retest of those 55 or 100 and 200-day moving average down here at around 92 to 100. It's probably in the works in the July NOV spread, which means our front month futures might be due for a little correction while deferred months remain better bid, or it could simply mean our deferred months end up catching a little bit of a better bid here right now as we unwind and try to build some carry into these very inverted old crop, new crop spreads, which, by the way, are kind of early for the year, right? I'd expect to see that inversion peak out during a peak planting scare or like a late planting or during weather markets of this month. So we'll see what happens. But I think that we have time now for this to unwind down to $1 over before maybe revisiting highs into the planting season. Then we'll come back to $1 over before, revisiting highs and deciding whether or not we really want to go inverted, and stay there and go to like the $2 to $3 over like the spread does, into the midsummer months during wild bullish markets. But I don't think we have the narrative to drive that price action. A higher dollar suggests that carry should be built into the marketplace rather than taken out, as there isn't that drive and demand for exports potentially. Well, there is, it's just slower than we maybe expected. And a good point of that is that we've only just now, right, seen China hit their phase 1 trade deal targets. And how many years later has that been, right? So they've always come a little bit short on our expectations to some extent. And last but not least today, wheat, slowly but surely, I think, making a turn, but running into our first resistance area here, into the first 100-day moving average up around 807. Didn't quite make it there. Old highs here, though, at $8. Getting front row of that $8 figure is important. We do have a very bullish signal of the 18-day crossing over that 55-day moving average, the first golden cross we've seen in wheat since the initial breakouts last year. So that's a good case, a good example here of a market potentially starting to show those bullish indicators turning. We're unwinding from overbought here on the daily RSI. We have that bullish indicator tick kicking off, so a pullback to test the 18-day and 55-day moving averages is to be expected. If we look back on the charts, the last time, right, the market, or anytime it sees this crossover occur, a good example is right here at 772. You can see how the market breaks through it. We have that bullish crossover, and then we come back to test those. And that was a drop from 820 all the way down to 880. So that's a 40-cent swing there after a bullish technical indicator pops off. Well, we just fell, from $8, and we're only at 773. So, hey, guess we're 40 cents off that highest, right into those indicators here. So, past performance is not indicative of future price action, but that's a good level to see. KC wheat, we see a very similar thing playing out. The only difference is we saw that bullish crossover last week, and we're pulling back now into the test those areas. And we're actually now trying to break above the 100-day moving average there, with Minneapolis spring wheat doing the same, just in its own kind of very tight range and indication there. July to July, protein premium here pulled back into our 80 area. I still think a one little push below 80 towards 70 might be in order, but certainly a show of support here if you're looking to maybe get long the wheat complex. I do like buying KC versus Chicago still. We're still down in overbought sold territory here. So, I'd like to see one little day of green. But again, if we flush out down to 70 here, there's upward sloping trend lines and other things down around that area that I'd want to be a buyer and bull spread this for a move to 100 to 110 if it gets it, but we'll see. And then last but not least here on the 4-hour charts of wheat, wanted to point out Chicago wheat is really just channeling higher off of our lows. We have an upward sloping trend line and trend channel here that has held into the 766 area. And then, let's get rid of the channel for a second. You see some trend lines we're breaking above, but I want to call to attention to this 50% retracement from the lows here at 712 up to, you could draw to the high of 766 or the high of 776. I don't care. Either way, the idea is the market pulled back into that 50% area and has now traded up towards the 78.4 or 784.5 negative 23.6 line. Next in the series from this basically lows of the month at 740 entry area up to new highs, 770 is your 50% next in the series long, which is traded. While you're above 764, you've got upside targets of 810. Okay, maybe wheat has taken 2 steps forward, 1 step back, 2 steps forward, 1 step back. We're going to go higher. The full swing from 712 lows up to the highs there for wheat at 755. Again, wouldn't be surprised to see that area trade as support. Generally speaking, I think we're still buyers in the dip here. Certainly, from a swing perspective, as long as you're above 712 and those prior lows, I think a bottom's trying to form. But I think we can be a little bit smarter and use some of these bullish technical indicators in the near term to better manage risk on, seeing if this is a turn for wheat, the wheat market, and a move higher. All right, well, that wraps up our strategy of the day. Join me tomorrow at 1:30 p.m. for the strategy of the week webinar, where we'll be covering the row crops and many more, including cotton. We'll take a look at our meats. The hogs and the cattle have something to say. We'll take a look at energy prices, particularly that crude oil, our precious metals and gold and silver, and of course the E-mini S&P and the bonds to see where some of our bigger macro trends might be heading and taking us. I'm Dan Hussey from Zaner Ag Hedge. Thank you for joining me. My number here is 312-277-0110. You can find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com. Have a great day, everybody. This has been your strategy of the day market update for February 15th, 2023, and we'll be back with you as price action develops.